Hello and welcome to Earnings Echo. We put together the most important information about Shift4 payments. Today we're analyzing the Q4 and full year 2025 results. On paper, the growth metrics look massive, but there's a clear tension here between the top-line expansion and where they actually landed relative to their own guidance.
Yeah, it is effectively a tale of two cities within a single earnings report. Let's look at the hard data. Q4 end-to-end volume hit $59 billion. That is up 23% year over year.
And that drove gross revenue to $1.19 billion, right, which is a 34% increase.
Exactly. But for professional investors, the only number that really matters is GRLNF, gross revenue less network fees. That came in at $610 million.
Which is a 51% jump from the previous year. I mean, 51% is impressive, but let's challenge that for a second. That $610 million figure landed toward the absolute lower end of their guidance range. So if the volume is hitting record highs...
Why is the net revenue scraping the bottom of their projections?
Exactly. Where's the drag coming from?
The drag is coming specifically from the small and medium business sector. While the enterprise segment is booming, we saw SMB same-store sales in the Americas looking visibly soft.
And management cited macro factors there, too.
They did. They pointed to adverse weather events late in the fourth quarter that dampened transaction activity. Basically, the local coffee shop slowed down, but the massive stadiums and hotels just kept humming along.
Okay, so we are seeing a clear divergence in the portfolio. But if the high-margin SMBs are slowing down, how did that impact the bottom line? Usually a mix shift toward enterprise compresses margins.
That is the real anomaly here. Despite the SMB headwinds, the profitability metrics were exceptional. Adjusted EBITDA margin actually hit 50%.
50%. That implies significant operating leverage. They're scaling revenue without adding proportional cost. What did the earnings per share look like?
GAAP diluted EPS was $0.36, but non-GAAP EPS was reported at $1.60. And you have to look at the spreads. The blended spread remained really healthy at 61 basis points.
Beating their 60 basis point target.
Precisely. So even with the mix shifting toward larger enterprise clients, they are maintaining pricing power. They aren't buying growth with margin compression. They are successfully pivoting the business model.
Let's talk about that pivot. On the call, CEO Taylor Lauber called 2025 transformative and pivotal. Is that just standard management optimism, or is the strategy fundamentally changing?
It's a real shift. It centers entirely on the Global Blue acquisition. This moves them beyond simple payment processing into a unified commerce ecosystem. We are talking payments plus software plus data.
The Shift4 playbook, as they call it. And they're integrating Global Blue's infrastructure to open up a cross-selling funnel worth over $1 trillion.
It is a massive addressable market, but obviously integration risk is high. Management is banking heavily on international expansion with this.
Right, and you need serious liquidity to execute that without blowing up the balance sheet. Do the cash flows support that kind of aggressive expansion?
The cash generation supports it. Adjusted free cash flow conversion is hovering right around 59 to 60%. This financial discipline gives them the liquidity to digest a really complex acquisition like Global Blue while holding on to that 50% margin profile.
Looking at the 2026 guidance, they are projecting GRLNF between $2.5 and $2.6 billion. And they pegged adjusted EBITDA between $1.165 and $1.215 billion. The investment thesis really seems to be shifting from a volume play to a platform play.
Exactly. The core echo for investors to take away today is the resilience of the enterprise segment. Shift4 has effectively hedged against Main Street volatility by securing high-volume, low-churn contracts in the experience economy.
Right. They're becoming less of a pure payment processor and more of a commerce operating system, which raises a really provocative question for you to consider regarding valuation. If Shift4 closes the loop on software payments and data for global travel, do they stop trading like a fintech and start trading like a high-margin SaaS platform?
That is exactly the re-rating opportunity the market is currently weighing.
And finally, the obligatory disclaimer. All content in Earnings Echo is AI-generated information. It does not constitute investment advice. Investing involves risks. We assume no liability for your investment decisions. Do your own research before taking action. Numbers checked, portfolio prepped. Catch you again soon.